How's it going, everyone? We got big news coming out this Monday. The US Census Bureau just released the official 2020 US Census population counts by state. This is absolutely huge news for real estate investors. We have the verified population data for 2020 by state. And if you're a home buyer and investor and you care about appreciation, you know this, that population growth is one of the key determining factors of real estate appreciation. So it's super important for you, whether you're a home buyer or you're a real estate investor looking for a place to invest, it's super important for you to understand what these demographic and population trends are throughout the United States. So what we're going to do in this video is we're going to break down the results of the 2020 census, both at a national level and then a state-by-state level, so you can see where is the demographic growth going, where is the population growth, where are the best places to go for real estate investment. Another thing we're going to do is we're going to get specific on where the population growth is coming from for different states. Is it organic growth, aka more babies being born than people dying? Or is it migration growth, aka people moving from one state to another? There are big differences between states in those specifics as well. So we're going to cover all of that in this video. This is a must watch if you're a real estate investor, if you're a home buyer who's looking into different states and you want to get guidance on where the demographic growth is. This video is a must watch. So without further ado, let's get into it. So to start things off, we need to talk about where is growth going in general. Is the US growing more than it has in the past, or is it growing less than it has in the past? And this is really important to understand at a general level because it's growth expectations, growth in population, as well as things like jobs. It's ultimately these growth expectations which are going to determine the future direction of real estate values. Because, of course, for real estate to be valuable, there needs to be people who are willing to live there, right? If you have an apartment, someone needs to be willing to rent it out. If you have a home, someone needs to be willing to buy it. So you need population growth to support real estate demand and real estate values. And the one big trend, which is actually pretty concerning, is that growth in the US is slowing. It is slowing significantly over the last 3 to 4 decades. The amount of people that the US is adding to its population each year is going down and down and down. And you can see what I'm talking about on this graph, which charts the decade over decade growth in population across the US going back 100 years. So we have a lot of historical context here. And what you can see by this dotted trend line is that the growth is going down. So back in 1920, 1930, we had a dip in 1940, but then back to 1950, we were around like 15% population growth per decade. So around 1.5% per year, or 15% population growth per decade. And then it really peaked in 1960 with the baby boomer generation. However, since then, since 1960, it's been on a basically a steady path downward. 13.3% in 1970, 11.5% in 1980, 9.8% in 1990. We had a bit of a bounce in 2000, but then it's been going back down since then, all the way to in 2020, we've had a 7.2% increase in population over the previous 10 years. So basically the population grew from 309 million in 2010 to 331 million in 2020, a 22 million increase. Now, 22 million, that's nothing to sneeze at. That's a lot of people being born and moving to the US, but at 7.2%, you know, that's the low for the last 100 years. And, you know, if you exclude this one outlier in 1940 after the Great Depression, no other decade is even close to as low as 7.2% in 2020. So what this means is that growth in the US is going down in a secular long-term fashion. So as a real estate investor or a home buyer who cares about appreciation and growth, you're probably a little bit concerned by these numbers, right? If we have less new people moving to the US, less people being born each year in the US, that's going to decrease demand for real estate. However, I wouldn't say that this is like a catastrophic thing by any means. I think what it really means is that you have to pay a lot more attention to the areas that you do invest in real estate. And you need to pay a lot more attention to what's going on in the specific state and the specific city in terms of demographics and population. Because it's not as if all over the US is slowing down. There's certain areas of the country which are slowing down a lot. almost in actually in negative territory, losing population. And there's other areas that are really growing still at very fast levels. So the overall lower growth across the US just simply requires you as a homebuyer investor to pay more attention to the local demographics, the local growth factors affecting your investment. So now we're looking at here is a map of the US, all 48 continental states, and the color coding and the percentages show what the population growth was for each state over the last 10 years, from 2010 to 2020. And basically, the bluer shaded the state looks, the more the population has grown. The more translucent or red shaded the state is, the less the population has grown. And I think the first thing that sticks out are the tremendous regional differences, right? If we go to the southeast here, states like Virginia, North Carolina, South Carolina, Georgia, Tennessee, Florida, we're seeing really high population growth metrics in these southeast states. Right? Most of them are around 10% growth or more over the last 10 years. So this is a big bucket of growth here in the Southeast. So guys, I spent a lot of time putting these videos together. I love sharing this data with you guys. In return, all I ask is just please hit the like button, and then please also comment on the video. Hitting the like button, you guys commenting, that tells YouTube that it's a good video and it's going to show it to more people. And I want to converse with you. I want to hear what you think. Do you agree with what I'm saying? Do you disagree with what I'm saying and what the data is saying? What's your local experience in real estate? Let me know in the comment section. I want to hear from you. And of course, if you haven't subscribed yet, please hit that subscribe button so you don't miss this content going forward. All right, let's get back to the video. Of course, Texas is one of the highest growing states. Texas has grown its population by 16% over the last 10 years. It actually added 4 million people to its population. That's huge growth. So Texas is a big grower. And then we have this kind of southwest to mountain state area here, Idaho, Nevada, Utah, Arizona, Colorado. These areas are also growing. So there's really two principal areas of growth in the country. It's these southwest and mountain states, and then it's these southeast states. That's where the majority of population growth is coming. And then you could really see it's really the Midwest into the Northeast where the really low rates of growing are, the really low rates, the secular stagnation is occurring in the Midwest to Northeast. So there's really heavy regional differences that are occurring here, which have been occurring over the last couple decades and are really still in high gear. This southeast, southwest mountain growth surge, and then this Midwest and Northeast stagnation. So obviously you look at that and you think a state like Texas or Utah, probably better for real estate, right? More population, more babies being born, more people moving to these states means that there's going to be more demand for real estate. You go to a place like maybe West Virginia or Pennsylvania or Maine or even like New York, and there's going to be less demand for real estate going forward in those areas. So that's like the first thing to note, right? If you're an investor, you want to kind of, all things equal, you probably want to head to the areas where there's more population growth over the last 10 years as reported in the 2020 census. But we need to get even more specific because there's really two different ways that a state or a city can grow its population. The first way is what we call the natural increase. This is the ratio and the difference between new births, babies being born, and deaths in the local population. So if more babies are being born than people are dying, that's going to grow the population. Now, on the other end of the spectrum, we have migration. And migration is the difference of how many people move to a state, right, versus how many people move away from a state. So if we have positive migration, more people are moving in than moving out. And it's really the composition here of that natural increase in that migration, which makes your population growth and makes your future real estate demand. But what's really interesting is there's big differences across the country in the composition of this growth. Like some states rely very heavily on migration to support their population growth, and other states rely a lot more on just the natural increase, right? The babies being born that really propel the population growth forward. And it's really important to draw a line here because I think a lot of people love to focus on the migration. That's the thing that's always reported in the news. You'll always see news articles about like exodus from California, people moving to Texas, or exodus from New York, people moving to Florida. And I think people tend to solely focus on that aspect of the population growth, but it's really the natural increase which is the more important driver of the two in the long run. So we're going to get into the specifics here about how to tell the difference across different states across the US. So what we're looking at on this graph is we're comparing the percentage of population increase from 2010 to 2019 in each state that came from migration, which is here on the x-axis, and then the percentage that came from the natural increase on the y-axis. So basically, the further to the right a state is on the x-axis here, the more domestic migration there is. So for instance, in Florida, you can see that 11% of Florida's population growth came from migration, people moving from other states. Only 1% came from natural increase, more babies being born than people dying. So Florida is a state that relies heavily on domestic migration. You can tell this, actually, it's not even close. Like Florida, 11% migration. The next closest is Nevada at 8.3. So Florida relies more on migration than any other area in the US. On the flip side, we have Illinois. So Illinois actually has lost 5% of its population over the previous 10 years due to domestic migration. So way more people are moving out of Illinois than moving in. Now, the other side of the coin here is the natural increase, right? A place like Utah really stands out here. 10% of Utah's population growth came from babies being born. So Utah has a very young population, right? Very youthful population, a lot of families, a lot of Mormons, a lot of kids, right? And that's a huge driver of population growth. You can see Utah's 9.7% natural increase, way higher than any other state. Texas is in second place at 6.5. So Utah, while it's benefiting, you can see from some good migration at 4%, it's really the natural increase which is driving Utah's population growth. And really what a state wants to be is in this top right quadrant. Because if you're in the top right quadrant here, you're getting the natural increase from population and you're getting positive migration. Where you don't want to be is the bottom left. The bottom left quadrant means that you don't have very many babies being born, that and people are leaving the state as well. So we see West Virginia, Vermont, Pennsylvania, Rhode Island, Ohio, Michigan, Connecticut. Those are the states that there's like lots of headwinds to their population growth, not very many babies being born, and not many people moving there. So it's important to understand the composition between these things. And the one thing we can't escape, and I think it's the principal reason for why growth in the US is declining, is because the US is aging. 30 or 40 years ago, the median age, the middle age in the US was 27. Today it's almost 40, right? We have a lot more seniors today than we did 30 or 40 years ago. And then fertility rates, even for younger people, are going down. So women are having less children than they were 30 or 40 years ago. And that's going to push population growth down. But there's huge differences between states as far as age, fertility, and babies being born and natural increase. There's massive differences across the country. So while the country as a whole is aging and lowering the population growth, as we saw in a case like Utah, it's not uniform. A place like Utah still has the type of fertility and population and babies being born as most of the US did 30 or 40 years ago. So that's really important to understand. A place like Utah is going to just keep delivering huge levels of population growth. Forget migration, like Utah doesn't even need migration. It's just through natural increases and organic increases in population. It's just going to keep adding people, and those people are going to need places to live eventually. A baby is born today, maybe they don't need a house right away, obviously, but 20, 25 years down the line, they might rent an apartment. 30 years down the line, they might buy a house. And to really push this point home for you guys, and how the differences are really abounding across the US in fertility and births and deaths and natural increase, look at this graph, which looks at the birth to death ratio in each state across basically 2010 to 2019. This is data from the US Census Bureau. And basically, what we're measuring here is the ratio of births to deaths. So in Utah, from 2010 to 2019, we had 467,000 births, 155,000 deaths, and that's a ratio of 3 births for every death. So that's how you get big population growth. And you can see Utah at 3-to-1 is like just way ahead of everyone else. Texas is in second place at 2.1, California at 1.9, Colorado, Idaho, North Dakota, Georgia, Minnesota, Washington, Nebraska, South Dakota, Arizona. These are some of the states that have the best ratio of births to deaths, the highest increase in natural population. If we go all the way to the other end of this graph, West Virginia and Maine, you can actually see these two states, West Virginia and Maine, had more deaths than births over the last 9 years, which is crazy to think about. If more people are dying in your state than are being born, that means you're basically locked into long-term population decline. More people are dying than being born. Think about what that means for real estate for a second. You might have a lot of like 70, 80-year-old people, 90-year-old people who are living on their own. Maybe they're renting an apartment, owning a home. Like in these states, they're dying, right, when they get to a certain age, and there's no replenishment from the younger population. So that's pretty scary for states like West Virginia and Maine. States like Vermont, New Hampshire, Pennsylvania, Rhode Island, Alabama, and actually Florida, believe it or not, are also really low. They're around 1.1 births for every death. So Vermont, New Hampshire, Pennsylvania, Rhode Island, Alabama, Florida, they are not replacing the people who are dying with new births. So that's going to be a headwind for these states going forward in terms of demographic growth, is that they are just simply not producing enough new people on an organic basis. Now, that doesn't mean we ignore the places with a low birth to death ratio, especially in the case of like Florida, high migration counts, right? The highest in the country, which is replenishing the population that way. However, it is important to think about, because from a demographic perspective, if your state is young, like Utah and Texas, and is producing lots of new kids, that is a huge head start in terms of the demographic growth game. It's a massive head start to not even have to rely on migration for your real estate demand growth. Just through new kids being born, more than people are dying, you are producing real estate demand growth. That is huge. And I think these differences are really going to continue to accelerate around the US as the population continues to age. We're going to see more and more of these states slip below that 1-to-1 level, births to deaths, and start to enter long-term population decline. And so these are going to be states that are going to be hard really to manage from a real estate perspective, because you're not going to have the demographic growth that's going to increase real estate values in the long run. Now, I think one thing you guys might be saying is like, Nick, I don't understand how a baby being born is good for real estate or the local economy. Like a baby is just born, whether it's a second or third or fourth kid, it's just born into the same household and it's not directly increasing real estate demand. Well, in the short term, I would agree with you. However, you need to look at actually functionally what babies being born does for a local economy. I mean, any parent would know this. When you have kids, the amount you spend in the local economy goes way up, right? The amount you spend in the local economy goes way up if you have more kids. So kids being born is almost like local economic stimulus. Parents who were saving before are no longer saving. They're spending on things like bigger cars, bigger homes, more food, more clothes, and that's all stimulus to the local economy. So babies being born is actually a really good thing for the local economy, and that filters down to real estate demand in the intermediate term. And then when those kids get older, right, they're going to have family ties to the area. They're probably going to want to stay in the area, a lot of them. That's going to directly increase real estate demand, right, once those kids become adults. So that's why organic population growth really matters from both an economic and a real estate perspective. So I think there's a couple overall lessons here for real estate investors and home buyers. Number one is that the U.S. growth is slowing as a whole. Right? There's the easy growth, the low-hanging fruit growth that the U.S. experienced in the 50s, 60s, 70s. It's not really there anymore, right? That means we need to be more selective about where we look and choose for real estate investment. We need to be more selective. And fortunately, the data is out there, from the 2020 US Census, the data is out there to spot the locations that are receiving the most growth. But the third thing I think we need to pay attention to is that organic population, that natural increased population, because that's what's going to really lock in places like Utah and Texas over the long run, even more so than the migration that's occurring. The fact that those states are so young and producing so many kids is what's going to drive long-term population growth even more than migration. All right, guys, I hope you enjoyed this video. That's it for today. Typically on Wednesdays, I normally do market deep dive videos into different cities across the US. However, I subbed this in because I felt that the 2020 census results were really important to talk about. So I hope you guys enjoyed this alteration. I'll be back with market deep dives on Friday, where I'll be looking at Seattle, the city of Seattle's real estate market. So make sure to take a look at that. And then on Sunday, I'm going to have part 3 of my housing bubble and crash series, going to talk about how prop tech is inflating inflating the real estate bubble and will cause its eventual crash and demise. Until then, this is Nick from ReVenture Consulting signing off.